Because in the absence of value, price is the only thing that matters. Nobody wants a mortgage. So why do we keep selling mortgages? Why don't we start offering and committing to what people actually want, which is financial freedom? They're asking for certainty. They're asking for strategy. They're asking for protection. Rate is just the language that they use. So they're not shopping lenders. They're shopping confidence. What's going on, everyone? Happy February. Hope you all are doing well. We have everybody kind of rolling in here. This might be our most well-attended webinar that we have had yet. And I think obviously it's very timely as it pertains to just the market that we are in today. As we know, when rates come down, everybody who was out of the business gets back in. Everybody who was slow starts working hard again. I think people just wait for that tailwind. And so the goal with our time together today is to help you just genuinely understand how to win your client's business, how to retain and keep your client's business, even in a time when a lot of desperation exists in the marketplace and people are willing to do deals for next to nothing just to keep the lights on, for lack of a better term. Just to give you a little bit of background, my business was always in Orange County, California. You could not throw a ball and not hit a mortgage lender. And so I would consistently, every time I had a client, we would work our tail off and they would get quotes that were a half point lower, a quarter point lower. And for a long time, I just felt like it was happening to me. And so I spent a decade plus creating a systems, processes, and most importantly, a value proposition that would help me stand out. So my clients chose me based upon the value that I would provide to them before, during, and after a transaction, not just the terms in which I provided them for the transaction in that 30-day period only. And as I did that, not only were my clients choosing me more and more often, even when much cheaper options existed, but they really saw the value and it increased every aspect of my business. And most importantly, I was really fulfilled with the work, right? Because I wasn't just selling people debt anymore. I was actively helping them grow their wealth and becoming successful homeowners. So as much as this time together we're going to spend today is going to help you with all things rate shopping and just not having to be the cheapest, it will also give you a sense of pride and fulfillment in the essentially the value and the commitment that you make to the consumer. And all of that is a flywheel effect. And it helps substantially in all areas of your business. We got a lot to cover today. We have 57 minutes left. So let's dive right in. And guys, use the Q&A section. The chat is disabled, but you feel free to use the Q&A. And then as time permits at the end, we can come back in and the team and I can help run through the Q&A. So let me share my screen and we will get rolling here. All right, so for those of you who do not know me or you have not attended any of these events before, my name is Ryan Grant. For many years, I was one of the top 25 mortgage professionals in the country. Was really proud of that, but also was not very excited about the future. So we made some very significant changes along the way, a lot of which we're going to go over today. Currently the president of Neo Home Loans. I was one of the co-creators of Loan Atlas, which is an incredible coaching and teaching platform. Started Art of Homeownership in 2018, which you'll see a lot of in today's conversation. And my proudest thing is that I am a husband and girl dad, 2 daughters. This is us on Valentine's Day. And this is my team and I to the left with Jocko getting our ass kicked on one of his sessions at 4 a.m. We are going to talk a lot today. As we do, I'm going to refer to a lot of previous webinars. So if you can, scan that QR code and it will take you to this link tree where you can do a lot of things, but on the bottom it says watch webinar replays here, because a lot of what we're going to talk about, you may have to go back and look at some of the previous webinars, which will be incredibly helpful for you. I just don't want you to feel like you're missing out on anything. So get a chance, scan and then go to watch previous replays and everything that we've done. All this, I think this is our 8th or 9th webinar that we've done now. You'll be able to watch all the previous ones and they should be extremely helpful and eye-opening for you. All right, so without further ado, let's dive in. We're going to talk about how to stop getting shopped, essentially how we are going to win in a rate shopping environment without being the cheapest. One of the things I'm most proud of that we've accomplished in the mortgage space is now our team and our organization and many people that we've coached over the years have understood I don't need to be the cheapest. And I genuinely don't, nor should I. It's not good. It's not what's best for my clients, not what's best for the business. It's not what's best for the future of our industry. And so we're really going to dive into why value beats price any day of the week. So let's start by talking about what happens when rates come down. We're all experiencing this right now. right? Rate sensitivity is not it's not an innate thing. It creates some level of confusion because there's a lot of noise, right? All of a sudden, billboards start showing up, internet ads start showing up, servicers start making phone calls. As rates come down, clients see rates everywhere. They hear about rates coming down everywhere. And so it's not a distrust thing. Typically, it's just an overwhelming sense of information that people, if they're left to their own devices, are going to struggle with. And choices start to explode, right? People, all the companies that kind of went away or hibernated for a while, well, all of a sudden they turn back on their internet marketing, right? They're going into the rate table leads. They're just flooding the market because it's just so easy to pick off refis. And that's what our industry is typically focused on for a long time. It's only the people who are out there shaking hands, kissing babies, doing the real work in your market. That's typically who's going to get the purchase business. But when it comes to lower rates, there's an overwhelming sense of information and choice. And then really what it comes down to is people just don't know how to evaluate values. They default to price. And I will say this as, I guess, kindly as I can. Our industry has never really focused on value other than closing fast, good communication, education, but it's all transactional. It's all about the transaction. I want to help everybody today understand how to break apart value between before, during, and after, because in the absence of value, price is the only thing that matters. And we're going to really unpack that today, and it might hit hard, but if it does, that means that this is working, right? It means that you should be open-minded to change and evaluating what it is you're actually offering to your client. And what I mean by that is, as the slide says, it's not a pricing problem, right? You don't have a pricing issue. Typically, you have a leadership problem. And when I say leadership, it means if you're not leading the client in every area of their confidence, their education, their analysis, their trust and belief in you, then they are going to search for it on their own, right? So what we're going to show you today is how do you stand out early, because this is a predictable thing. And I've been doing this for 20 years now. I can tell you almost with complete certainty when this happens, why it happens, how it happens. And so we've actually created a solvable solution, which is what we're going to talk about here. So what we want to do is we want to control our value from the first conversation, the first time we talk with them. And we're going to start with purchase, and then we're going to move to refi towards the end of the call. But purchase is the most important thing because typically we're all refinancing our past clients, right? Every now and then somebody will call in and we'll get a new refi, but for the most part, we're refinancing our past clients. In order for that to work well, how you help them when they buy the home is of ultra importance. And so what we want to do is we want to teach clients that rate is not the actual product, right? We're selling them and we're offering them something, we're committing them something very different. And when we do that, you actually become possible to shop. We call it unshoppable. It's not a word, but we made it up because you're selling a different product. Like people can't compare what you're offering versus what XYZ Mortgage is offering because it's apples and oranges. And so we're going to go through some scripts. And by the way, at the end of this webinar here today, we're going to do a giveaway where we're going to give away every script that you've heard on this call and a lot of other lists of questions. And so everything I refer to will be neatly packaged for you. So stay to the end of the call, you'll get all that information. So let's start with the first conversation. First conversation is going to be with a first-time home buyer who really has no knowledge, right? Like you're the first touch point they've had. So if Mr. and Mrs. Smith are my clients, I'm going to say, Mr. and Mrs. Smith, I know Sally referred me to you or referred you to us, and we're super excited to help. I got a question. Have you done this before? Have you ever gotten a mortgage? Have you ever owned a home? Have you ever been pre-approved? Have you gone through this process? And let's just say in this case, Mr. and Mrs. Smith say no. I'm gonna say, okay, it's gonna be hard for you to evaluate us versus anybody else, but did Sally tell you what makes us unique and different from any other mortgage lender? No, Sally just said you're great and all our clients. Awesome. Well, I need to teach Sally how to refer me better. A, I need to give her better scripting. But B, I'm going to say, okay, typically what happens if you ever engage with a mortgage lender, mortgage company, is that you reach out, you let them know that you want to buy a home, they ask you some questions, what price range. Then they're going to have you fill out an online application. They're going to collect some documents from you, and then they'll give you a pre-approval letter. At that point, you're going to go out into the world, try and find a property. That lender is going to do their best to help close that transaction. And then for the next 30 years, you're really on your own, right? You own a home, but for you to become a successful homeowner, everything is going to fall on your shoulders. And the mortgage is really not that challenging, right? So what we want to do, Mr. and Mrs. Smith, is help you really understand how we're going to help you before transaction, during, but most importantly, after, because that's where your success is going to be kind of you make or break as a successful homeowner. And now then you move into explaining that a little bit in dreams and goals call. So that's the conversation, because again, there's no basis of comparison when you have a first time home buyer who's never done this before. So you need to paint the picture that you are very different than the rest. And I'll continue to paint that picture here in a second, but that's how you want to start that first conversation. Next conversation is with somebody who's already pre-approved. So someone who's already pre-approved this is how it goes. Okay, so have you done this before? Yeah, actually, we were pre-approved with our bank, but Sally said that you guys are great and we should talk to you also. Okay, perfect. Do you mind if I take a shot at how that pre-approval process went? Sure. You reached out to them, let them know you're interested. You filled out an online application? Yeah. And then you sent in some documents they requested? Yep. And then they sent you a pre-approval letter, maybe went over it with you a little bit, and now you're just out in the world looking for homes? Yeah, that's pretty much exactly how it went. And here's what you want to say. You want to say, Mr. and Mrs. Smith, look, I'm really sorry that happened. I'm sorry that you got maybe 10 minutes of someone's time and you had to fill out an online application and you had to do all your own homework. That's unfortunately just someone trying to sell you debt. And unfortunately, that's how the mortgage industry has always been. And so what I want to help you understand is how we are very different. So one of the first things we're going to do is we're going to ask you a lot of questions that are pertinent to qualifying, but also we're going to ask you a lot that are not. And as we ask them to you, I'm going to explain them so you know how much we care about your life, not just your loan. And so we're going to do a dreams and goals call. It takes 20, 30 minutes or so. I'm going to really understand your short-term and long-term goals. And then we're going to help you stand out when it comes to getting your offer accepted. We'll increase the likelihood of your offer acceptance rate from 16% to 70%. We will probably decrease the amount you'll have to pay for the home, so you'll save money on the price of the property. And we'll likely help you get a really great terms with a seller subsidy. We're going to walk you through all that in our consultation. But ultimately, we're going to talk about how we help you before, which is really important, during, not so much, but most importantly, after the transaction. We'll get to that here in a second. So again, that's how you want to script that already pre-approved person, because immediately I just put in their head what they went through was trash. What they're about to go through is going to be incredibly valuable, right? You want to paint that picture really early so they start to realize, okay, this is unique. And then we'll get into the next part of it. And then the last person is a seasoned homeowner, right? This is going to be somebody who they've owned plenty of homes, right? So I'm going to say, hey, have you gone through this before? Oh, yeah, this is my fourth home. I've had plenty of properties. I've refi. Like this is not my first rodeo. Awesome. So on your current mortgage, let me ask, when did you get that last mortgage? Oh, I refied in 2021. Okay, so 5 years ago. In the last 45 years, when was the last time that you heard from either your realtor or your lender to actively be managing your liability and actively helping you set and attain goals and making sure that you're navigating changes and evolutions in your life? They're going to say, oh, I've never heard from them. I may get an email every now and then or a pie on Thanksgiving, but other than that, then nothing. And I say, look, I'm really sorry that happened. Right? You really deserve to have somebody who's actively managing your largest asset and your largest liability. You deserve to have a team of people who are committed to helping you grow your generational wealth. And so what you'll experience from us, Mr. and Mrs. Smith, is very different than what you ever experienced before, right? How we're going to help you before this transaction is going to be incredibly unique, and I'll show you the value in it. But most importantly is how we help you after, because I think there's a lot that you may have missed in the last 5 years, and I'll explain that as we go through. So guys, and again, we'll send those scripts. We have them all written out, so stay to the end and you'll get all that. But this is where you start to then transition on that first phone call into the value proposition. So I put a QR code there. We did an entire 60-minute webinar specifically on before, during, and after. And I can't tell you how important that is if you really want to make sure that you're not being shopped and that people see you as a different product than the rest of the industry. Take the time to watch that webinar. And again, you can scan that QR code there. It'll take you to it. But this is where, when I start to get to in that first phone call, hey, here's how we're going to help you before, right? We're going to do a dreams and goals call. We're going to do an education analysis. We're going to do a full strategy planning session. We're going to make you look like cash. Has anybody explained to you why cash offers get their offer accepted at lower values? No, not really. Great. I'm going to explain that to you, and I'm going to help you understand why we're going to increase the likelihood of you getting your offer accepted at a lower price. We're going to talk about seller subsidies. We're going to talk about our offer strategy opportunity, but we are going to help you. I'm not sure if you know this, but the average offer acceptance rate is about 16% when there's roughly on average, if a home is priced appropriately, there's usually going to be on average about 6 offers on that home. Our clients have a 70+% offer acceptance rate. And so this is where it's so important that you understand the value in that. During the transaction, I'm going to be honest, it's only about 10% of our value, right? But we're going to do X, Y, and Z. And then after the transaction, in the consultation, I'm going to go into this in more depth. But this is where, again, you make or break your success as a homeowner. And we're going to talk about all the ways we're committed to you and your family, how we're going to help you for 30 plus years, and really why we think we're changing the mortgage industry, because nobody should ever just expect a loan anymore. That's an antiquated model that we're working in helping people get past. So again, watch the webinar on that. It will help you tremendously when it comes to rate shopping. So now let's say somebody calls you and says, man, look, I'm just looking for the lowest rate. All right, I just want your rate quote. Sally referred me to you. I'm already pre-approved. I've been pre-approved by 6 lenders. I shop rates online every day. I appreciate all that stuff, but can you just tell me what you can offer me? We all get that phone call, right? The person who doesn't want to hear anything about anything except what's your rate. So best way to do this is to take control of that question with very disruptive questions. A disruptive question is like a pattern disruptor, right? Like they are on this path. I just give me your rate, give me your term, give me your rate, give me your term. You need to throw a question out there that helps them realize, oh crap, there's a lot I don't know. So I'm going to give you 3 of these questions, but at the end, again, we'll give you an opportunity where we'll send you, I think there's 12 disruptive questions, and you can use them in different points depending upon where the client's coming from. But one thing I would say is, okay, Mr. and Mrs. Smith, I totally understand that all you're looking for is a rate and a term. One of the things that would be helpful to know is, did your current lender who has you pre-approved or your agent, did they tell you how when you make an offer on a home, how to use a seller buy down subsidy to get the lowest monthly payment and save on closing costs? Because we could potentially get the rate down to 3 or 4% if we structure your offer appropriately. Did anybody talk to you about that? Oh, no. How do you do that? That's something I'm more than happy to talk to you about. We do this for all of our clients as part of our offer acceptance strategy. It's part of how we submit offers. If I just gave you the lowest going rate that exists in the mortgage-backed security market, not going to be that great. But if we structure your offer appropriately, that's how we start getting rates in the 3s and the 4s. Oh, okay. Next question. All right. So did anyone talk to you about when you write this offer? Because again, whatever rate you get, did anyone talk to you about how to increase your offer acceptance rate? And do you know the average is 16% offer acceptance rate? No, no one told me that. Okay, totally makes sense that most people don't. Our clients have over a 70% offer acceptance rate. So what I don't want is for you to get the cheapest interest rate out there, but never buy a home, right? Or worse, overpay for the price of that home. So our clients get very competitive interest rates, but they also have a high likelihood of actually getting the home they want. And they typically save tens of thousands of dollars on the price of the home because we make them look like cash. Did anybody talk to you about how to do that? Oh, no, they haven't. Okay, great. Last question. Has anyone gone through a pre-purchase consultation with you to help you understand your different down payment options? Because you said you're putting 20% down, but have you looked at 19% down and the benefit of that? Have you looked at 10% down? Have you looked at 30% down? Has anybody gone through those and talked to you about different monthly payments and how it fits into your short and long-term plans for cash flow and retirement? No, nobody's done that. Great. At this point, if that client is not just waiting for you to take control, like there's something wrong with the client. If you ask enough disruptive questions to get them to realize, crap, this person's asked me 3 things that sound really helpful, but nobody's told me about this. That opens them up to everything else. So you'll get this list of disruptive questions. Again, just stay to the end. We'll give you the ability to do that. But you want to have these questions handy. I used to literally just keep them on my desk because I hadn't like fully memorized them yet. And when I'd get someone that would call and say, hey, I'm just looking for rate, I'm just looking for rate, right? I would say, okay, great. And I would kind of know which one to go to based upon where that client's coming from. And then that cracks that client wide open. They're putty in your hands and you have every direction to take them. So again, you'll get that list here in a bit. At this point, you've showed the difference between first-time homebuyer or seasoned, like you juxtaposed standard lender versus you. You've just created any disruptive questions to get them open to hearing from you. Now you want to work your way into the dreams and goals call. And this dreams and goals call is really important because as you see at the bottom, the client by the end of this call will realize that you care about their life, not just their loan. And I can't tell you how powerful this dreams goal call is. One of my favorite questions to ask is, hey, I know you've been pre-approved before, or I know you've owned a home before, whatever the case may be. But has anybody in this pre-approval process ever asked you about life insurance? No, not one time. Here's the problem with that, Mr. and Mrs. Smith, is that life insurance we're one of the only countries in the world that will allow people to get a mortgage without life insurance. I think it's inappropriate. But the problem is that I could help you get a loan. I could help you own a property. But then if something happens to one or the other of you and you don't have this in place, you actually lose that home and you can lose a lot of money. So I want to ask you about life insurance, not because you need it to qualify, but because I think it's an appropriate thing for you and your family. And I can actually build that in to our entire financial model, right? So if your monthly mortgage payment is X, and I know that you can get a term life insurance policy for $100 a month, we should figure that into the equation because then it keeps you protected. And I can tell you more horror stories than I would like to admit where people didn't have life insurance and it really turned sour. So again, I'm not selling it. To be honest, I don't actually care if you get it. I just care that you know about it, right? So you and your family can make a really educated decision and so you can be a successful homeowner. That's just one of the many questions that you'll ask in this dreams and goals call that will create such a shining light on, wow, he asked me so many questions that really makes me understand that he's looking out for my family's best interest. I talked to three of the loan officers and they just sent me to some online app and I filled out some information, but it's pretty clear they don't give a shit about me, right? Let's not be that loan officer, right? Let's be the mortgage advisor who asks all the right questions to really spotlight the fact that they have us in their corner and we're not going to let them do something bad, right? Dreams and Goals Call is part of one of the first webinar. Take a look at it. And obviously we can send out this template as well, but I would highly encourage that you guys do it. And then you move into the pre-purchase consultation. So at the end of the Dreams and Goals Call, that's when the pre-purchase consultation is scheduled. This picture is of one of my first pre-purchase consultations in 2013. It was terrible. I was literally like handing pieces of paper. I didn't have anything to present on. It was awful. Now we do them all via Zoom. People don't have to come to our office. You can do a pre-purchase consultation with anyone in the world face to face. They can see your screen. But this is incredibly important because before I started doing these consultations, I maybe would close 50% of the people that I would pre-approve because the other 50% would get a much cheaper rate and be gone. They would just ghost me. They wouldn't even call me back. When I started doing pre-purchase consultations, I converted it over 90% because I was face to face. I was highly interactive. I was educational. I showed options. I started talking about the before, during, and after of all the things. And so this is where it's just really important that you go through this, and we won't need to do a full training on it. But once they realize what they're missing from other lenders, they become really confident that you are what they want and what they need, right? Because you're going to help them get what they really want, which is the house. You're going to help them become what they really want, which is a very successful homeowner and creating generational wealth. Nobody wants a mortgage. So why do we keep selling mortgages? Why don't we start offering and committing to what people actually want, which is financial freedom, which is creating a real estate portfolio that creates a ton of income and assets for them, which is the freedom and security of knowing that someone's managing their liability. Like they don't even have to worry about the mortgage. Let's start selling those things, right? Because the mortgage is the worst part of what we do, right? So let's talk about all the great things we do. In the consultation, this is really does it. So just a brief kind of consultation understanding. This is, again, in the consultation, we very much go over the before because the before is real time. The during we talk about and we downplay because, again, anyone can do the mortgage. And there's plenty of cheap mortgages you can get out in the world, right? But they don't do the before and they sure as heck do not do the after. So this is just a quick, let me see if can you guys see this? Did it move over to this
No,
here?
no.
Okay. I'm not going to mess with it because it'll probably mess it up. But what I'll do is I will make sure we send out this link. It's just got a brief analysis of what we go over in the consultation. But the most important part of the consultation, like the actual influence objective of the consultation, is to get the client to commit to you. This is before they even write an offer, right? So you want the client to verbally commit, and we even have them sign something that says they're committing to us. Now, it's not binding, but it helps with the mentality of it all. So here's what I say. I talk about all the things we do. And then I say, hey, do you want us to help you get your offer accepted at 70%? Do you want us to make it look like cash? Do you want us to help you decrease the price you have to pay on the home and get seller subsidy, so on and so forth? Yes, absolutely. 99 out of 100 people say yes, unless they're just not ready. And then I say, okay, great. One of the things we need to do is we just need to make sure that we get three commitments from you. And in these three commitments, the reason why we ask for them is because my team is going to do a lot of work. It's going to cost me and my company about $1,000 between processing your loan, pre-underwriting your loan, because an actual underwriter is going to underwrite it, and doing all the preparation and work and doing the offer acceptance strategy package, which I'll show you here. All of these things are going to be really important to getting your offer accepted, and we don't charge you for this. So I just want to make sure, A, that you're committed to writing offers on homes in the next 30 days. And if you're not, no big deal. We can wait on this. We can wait until you're ready and we can do more work. No, yeah, we're definitely ready. This looks great. Okay, awesome. Number two is I just want to make sure you're okay getting me all the required documentation. Most lenders ask for this like at the 11th hour when you're already under contract. We're just going to ask for it all now so we can do all the work that, again, typically people wait until the last minute to do. That way it's super stress-free and very easy. I just want to make sure you're okay getting us that documentation. Yeah, no problem at all. Great. And then lastly, Mr. and Mrs. Smith, I just want to make sure that you believe we're the right lender to work with and that you're committed to working with us. And the reason why I have to ask that is because unfortunately, we've had times in the past where we've gone through this, we've paid the underwriter, we've done all the work, we spent multiple tens, if not hundreds of hours on a transaction. We get someone in the home, they save money, they have an incredible deal, and then they think, oh God, I need the lowest rate. And so they leave us for a quarter lower or something crazy like that. And so we just can't go through this unless you're committed. This is where like you need to have the courage to ask that question. And it most of the time, in my experience, if this is done confidently and you just do it as if you do it every time and everybody says yes, they will say yes. Awesome. Cool. I'd love to hear that. If you have any questions about it, let me know. Here's a document you guys can sign just stating that you're committed. And then you just move on, right? Like you have their commitment. Now, this isn't 100%. Doesn't mean that they have to use you. They could still go under contract and shop, but you have a much better opportunity of them like having that conversation with you as opposed to just ghosting you and going for a better rate somewhere. Now, let's just say they say no, because that happens too. Right? Man, Ryan, I love everything about this, but I'm super focused on making sure that we get the best terms, the lowest rate, and I just want to make sure that we do our due diligence. Ms. Smith, that's totally fine. I completely respect that. I would I would be shocked if you didn't, to be honest. I would want to make sure that you do all of your due diligence. So I actually want to help you with that, right? Because I don't think most clients don't know how to effectively evaluate lenders, right? So what they do is they just ask for rate and cost. So I'm going to send you a list. There's 9 questions. And I'm going to encourage you, today's Thursday, I'm going to encourage you between tomorrow and over the weekend and test it over the weekend. Try and get a hold of lenders over the weekend because that's when you're going to need them a lot. Call them and ask them these 9 questions because these 9 questions are the absolute best way for you to evaluate the lending partnership that you need. And then let's reconvene maybe Monday or Tuesday. I'll give you a call Monday or Tuesday. And I just want to know give me your honest feedback. And what I'll commit to you, Mr. and Ms. Smith, is if you found a lender that you believe is better for you and your family to help you get the property, to do the transaction well, and to help you become very successful homeowners in Georgia, if you believe that there's a better option, I will personally help you. I'll transfer your documents over there. I'll help them with the application. Like I will help facilitate that transition to another lender, right? Because if you find somebody better or more suited for your family, then I don't want to get in the way of that. But I want to make sure you're not evaluating lenders inappropriately. So I'm going to send you this list. Does that sound good? We'll follow up. Yes. Great. All I've done is I've given them a loaded gun to just shoot down every other lender. Because once they start asking these questions to lenders, they just fall on their face time and time again. We typically get a phone call back within 24 to 48 hours saying, oh, yeah, we call a few other lenders. We talked to my bank. We asked them some of those questions. It's pretty clear they have no clue. We're going with you. So either way, just please have the confidence and the systems built in your business to not do all of the work for the client, help them get their offer accepted, and then have them leave you at the altar. Right? It's a terrible feeling personally. It takes all the wind out of your sails. Your team gets pretty distracted and upset. So get the commitment early. And if they're not committed, help them become committed. Right? Give them the process to go through. And we'll send out that list of questions to help shop for mortgage professionals. So again, just stay to the end and we'll make sure you guys get that. So that's part of the consultation again, the most important part of that consultation is getting that person to commit and say yes. So now they're pre-approved, they're out into the world, they're looking for properties. You want to let them know, hey, when you find a property, we're going to have an offer acceptance meeting, me, you, and your agent. are going to go through this, or my team, you and your agent, we're going to go through a market analysis. We're going to make sure you're approved. We're going to make sure to talk about appraisal gap strategies. And we're going to talk about if you need to do a buy before you sell, if we need to do a bridge, if we need to do any of that stuff. But just know that there's a reason our clients have a 70% offer acceptance rate. And it's not because they just take some random pre-approval letter and throw it out into the world. It's because when you find a property, we're going to want to figure out, okay, how much should we be asking for our seller concessions to buy your rate down to get you the absolute best terms? We talked about this on the first phone call. We are going to make sure that we know the home needs work. Should we put a little less down? Should we put maybe more down if it's a turnkey home? Right? Should we be offering a 15-day closing time frame with no appraisal contingency, no loan contingency to make you look like cash? But maybe we offer a bit of a rent back because maybe they're not ready to move out in 15 days. And maybe we do a free rent back to help increase our offer, make it a little more attractive so they can close in 15 days, get the money in, but maybe they have another 30 days or so to get out of the house. You don't want to talk about all these things. Right? And then you want to say, and one of the biggest parts, Mr. and Mrs. Smith, of getting your offer accepted is that I'm going to call the listing agent, and it's highly likely that me and that listing agent are going to have a relationship because I've been lending here for X number of years, so on and so forth. So I'm going to use my influence to help show them. And again, they know that when we have a client, they close, transaction goes extremely smooth. So we just want to make sure that we're strategizing on your offer. Who could go through that whole thing and then not use you? Right? You have to be a sociopath to use somebody in all those ways and then not use you, right? But without it, it's really easy to not use you. You just don't call you back because they used your pre-approval letter, they got online and they went out in the world and made an offer and there they go. We will include this link to Housing Link. We'll show you an example of what it looks like in the follow-up to what you guys get at the end of this webinar. But there's a full package that goes out and it is an incredibly valuable package. We use housing.link, Scott Nicholson's group there. We have it all built inside of our system, so it makes it really easy to use. But you want to have an offer package that goes out that is really professional looking, that shows the client's value, that shows the agent's value. And that this is, again, you're talking about this meeting, let's offer acceptance meeting. The buyer will have zero doubt about your value, right? Just in the before part of this whole thing, right? Not even meaning the during and after. It just lends credibility because you're doing what you said you're going to do. And then you want to very clearly explain here, hey, if this offer is accepted, which it should be, we want to have a contract meeting within 24 hours. Right? That is a very important thing for you to say when you're helping someone submit an offer on a property. And I'll explain here why. So the contract meeting, why is it so important it happens in 24 hours? So if you're on this call, this is a bit of a, you probably already know this, I ask my realtors all this. I say, hey, when is the most anxiety-ridden point in the entire process from start to close? When people, from the time they engage with us to the time they close on a transaction or after, when's the most anxiety-ridden time? And people are like, oh, writing an offer or looking for homes or getting pre-approved or the closing because it's stressful. And I say, no, all of it can be stressful, but that's all managed well. The most anxiety-ridden time is exactly the moment when they hear your offer is accepted. Because now it went from a thought to a reality, right? Now they have to wire a large sum of money to a place, to an escrow company or a title company. They don't know if they're going to get that money back in terms of their earnest money deposit. They are locked in on the price of the home, which is probably more than they wanted to pay. The payment's probably higher than they want. The taxes, everything becomes real right in that moment. And it is scary. And what people do is when they feel like they are out of control because everything's happening to them at that moment, they pull on the only lever they can. And what's that? The interest rate. That's the only thing they can possibly control at that moment. Literally, think about it. Taxes, insurance, purchase price, HOA dues, everything is locked in. The only thing they can manipulate is maybe I can get a lower rate. And they're going to forget about everything that you taught them in the consultation. They're going to forget about the contract or the offer acceptance that you did for them. It's human nature that all of this goes out the window. And so they go online, look for interest rates, do all these things. And so if you have a process to control this, then you control their emotion, which is why you say, look, within 24 hours, you getting your offer accepted, we're going to have a contract meeting. So offers accepted. Great. Mr. Smith, okay, can we do this today or do you want to do it tomorrow? Because we have to protect your interest rate. We want to protect your earnest money deposit. We want to make sure you know every step between now and closing and beyond. Yeah, great. Let's get on and do it right away. Awesome. You want to do this face-to-face. Zoom is fine, right? You don't want to do this over the phone. But essentially what you're doing here is you're going over every detail of the transaction. Here's your different rate options. right? Here's what the seller conceded because of how we helped. Here's some buy down strategy. Here's some no closing cost strategies. Here's what's happening in the market. We might want to float the interest rate because again, they don't, if they think that you're just offering a rate and that it has nothing to do with the market, then it's, oh, that's his rate. Let's see what other people's rates are. You want to let them know, hey, like we might want to float this thing. Or hey, with the direction that I see this heading in and the upcoming reports, we're probably going to want to lock it today. You need to be able to control that so they realize and feel comfortable and confident you're in control, you got this. And then in that contract meeting, you want to again reiterate, hey, we got your offer accepted. We have 15 days to do this thing. We're not going to, here's all the timelines we're going to hit. Here's everything we're going to do. And here's how we're going to protect your earnest money. And then when you close, here's where we're going to help you for the next 30 years. And because look, Mr. Smith, this is just a small couple window week. So actually it doesn't even matter what your rate is today, right? Because it will be different likely in the future. Now I can't guarantee it's going to go down, but there's a likelihood that we'll catch a dip and we'll be actively managing it. And then again, as your life changes and evolves, you probably won't even be in this home for more than 5 to 7 years. We'll do X, Y, Z. So you want to broaden their scope so they stop focusing on these 2 weeks and start realizing the next 30 years is what's going to make or break their success, not these next 2 weeks. And if you do that contract meeting really well, you will decrease the number of people who want the lowest rate at that time, but you have to take control. You have to lead the situation. And if you do that contract meeting in a high level, you'll be 90% plus close on that. So pricing in the contract meeting, this is going to be a little bit uncomfortable for many of you, but your clients can hear and feel your internal pricing narrative. If you are not competent and comfortable in whatever it is you're offering, you literally, like, we might have somebody on this call who is committed to being the cheapest lender in the country. Great. Somebody can always be cheaper. Someone can lose money on a loan if they want to do that deal. So it doesn't matter if you believe you're the cheapest or if you know that you're the most valuable and you know that your rate isn't anywhere near the cheapest. What really matters is, are you confident in why it is what it is? And a big part of this is confidence in your raw price. If you're confident in your raw price, then all you're concerned about is the margin that you have had, right? You and your company collectively. So if you have not, there's a link there. You're really going to want to watch the mortgage economics webinar because having confidence in what you're bringing to the market is just as important as having confidence as what you're offering the consumer, right? But you need to know that so many times in my career, I've been at companies where I would offer a rate, and in my head, I was like, God, this rate's high. I don't know. There might be people that offer higher rates. There are definitely people that offer lower rates. But because I didn't have confidence that I was in control of the economics and somebody else controlled the economics, then I was always like sabotaging myself. So one thing is if you do have total like transparent pricing and you understand margins, whether you're a broker or a mortgage bank, it doesn't matter. You need to understand total margin. Once you do that, please do not price the loans yourself. We actually A/B tested this with my team. So I used to price every loan before the contract meeting. And then I'd walk into the contract meeting and I would know, oh, if I'm offering 6%, I know I can get to 5.875 and I can still be profitable there. So maybe I'll just go there. Yeah. Like when you know all the economics and you're in control of them, you start to make decisions that are more emotional than logical. So what I started doing is I had my production partner too on my team. I just said, look, I want you to price every deal. I don't even want to know the margins. I just want you to make sure we're pricing at par and just build that pricing and I'm going to go sell it. And our pricing went through the roof. Our margins went through the roof. Everything got better because I wasn't like, if you own the store, you can give away the product. If you're an employee of the store, you can't. You have to sell what the store is offering, right? So I wanted to make myself in my head an employee of my own business. So I started just saying, you price it, you put together the total cost analysis, and I'm just going to go sell it. I don't even want to know if I can go up or down. And so I would encourage you, if you want to get better at pricing, and if you want to get better at margin control, have somebody else do your pricing, have somebody else lock your loans, have somebody else do all that stuff. You just sell what's there, and I promise you things will get better. What clients are actually trying to figure out here? If you really look at the totality of this, people are really trying to ask, like if they ask about rate or cost, they're really trying to ask them, like, am I making a smart decision? Am I overpaying or am I missing something? Can I trust this person or this team when it really matters? And then lastly, the most important one is, am I getting more value than what I'm paying for? Right? Because When you go out into the world and buy anything, that's what you're asking yourself. There's four options of this product. There's the cheap version, and then there's stuff in between. I don't want the cheapest option because there's not a ton of value, but maybe I don't want the most expensive option because I don't know that it's that valuable. You need to be somewhere on that spectrum with them because clients aren't asking for the lowest rate. They're asking for certainty. They're asking for strategy. They're asking for protection. Rate is just the language that they use. So they're not shopping lenders, they're shopping confidence. And all of this that we've talked about thus far feeds into that. So you might be asking, Jesus, like, how do I have time for all of this? Dreams and goals call, purchase consultation, offer acceptance strategy, contract meeting. That's all stuff with one client, right? And then it's contract to close, right? And then it's 30 years post closing. So this is where I would really encourage you guys to go to the team building webinar that we did. You can scan that link. Team building is the future of this industry. It always has been, right? There's not a single top producing mortgage professional or highly valuable mortgage professional that does it on their own, right? You have to have a team. And if you go to that webinar, you'll watch how do we use PP. I'm sorry, we call them production partners, which PP is a short term. Production partner. How does it then transition to credit analyst? How does it go to production partner two? Who does what? How does it go to loan specialist? You as the mortgage advisor, the only thing you should be doing are consultations and contract meetings. You're not managing your email. You're not doing the dreams goals calls. You're not taking the applications. You're not prepping your TCAs. You're not following up with agents. You're doing nothing. You're just doing consultations and contract meetings and grow the business. And that's where all this can really come together. And you may not realize this, but a lot of this plays into pricing. Because when you have 20, 30, 40 families you're helping every month, you can lose one or two, right? You're not worried about somebody shopping you here or somebody shopping you there. But if you do 1, 2, 3 loans a month, you're really concerned about everyone shopping you. And so it creates an even worse margin moment because you're like, oh, I need to get this client so bad. I need to be the cheapest so I get them. If you build a team and you're helping 50 families a month, you could lose 10% of those families. Now you're helping 45, but 45 of them chose you because of your value, not because of your price, right? So team building is an important part of this because it allows you to scale, and scale allows you to create less scarcity in your pricing habits. So hard truth here is without this process and offering this level of value at this magnitude, you have two choices. Choice one, be the cheapest. You have the lowest rate, you have the lowest cost. You have that option. It is a soulless, not valuable, I think bad for the industry, bad for our communities, bad for the consumer. It is a really bad option, but you have that option. Option two is you can be completely at peace when you consistently lose clients to price when they go under contract. Just know that, okay, I'm not the cheapest, so if they left me, okay, guess what? That's also a crappy option, right? But those are the two options. If you don't give this level of value, if you don't offer what I just taught you to offer, then you're just the same as any other loan officer in the country. You're the same as the call center guy who just got his license 3 days ago, who's just offering a rate and a term, and who's also going to close on time with good customer service and good communication, blah, 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 blah. Right? He's going to say everything you say, even though he's been doing it for 2 days. But please don't be the person that complains about the lack of growth or I can't grow and I can't scale. Like I help clients, but it's because your margins are too low. You're so cheap that you don't have any money to invest in the business. So you can't help more clients. You can't market to find more clients. You can't partner with great agents and builders. You can't invest in their business because you don't have the margin to do it, right? And don't also be the person that complains when you lose a client to price, but you spent 10 minutes with them. They filled out your online application. They sent in their docs. You talked to them for 10 minutes. They got their pre-approval. They're out in the world. And then they get their offer accepted and they're beating you up to be the lowest price. Like, don't complain. You spent 10 minutes with them. You didn't do anything that valuable, right? So that's why I said it's the hard truth. Like, we don't really have options here, right? We either need to be the most valuable to hold a competitive price that's profitable and allows us to scale and allows us to invest in that client's future, or we have to be the cheapest, but we just can't be in between because it's frustrating to be in the middle. So I'm going to get into refinance here. We got about 10 minutes left. And guys, if I don't get to the Q&A, we have all the questions. We'll follow up with you individually to answer your questions. So feel free to stack questions in the Q&A and I'm happy to follow up with you afterwards if you have questions. So first thing we're going to do is we're going to talk about types of refinances. Current past client refi, right? It's a rate and term. So one of your past clients is going to do a rate and term. Let's start with expectations. If you've helped a client in the past, right? And that client calls you and says, "Hey, Ryan, I want to refi. I think it's a great time, blah, blah, blah." You're already underwater, right? You've already lost leverage. You've lost value. That is someone who has figured out they should refinance and is reaching out to you. So what happens is when you quote them the terms and you go to lock them and move forward, they go, "Oh, you know what? Actually, I called some other places or I talked to my servicer and they're quite a bit lower. Can you match it?" Now you're playing the price game. You don't have the ability to say, "Hey, Mr. and Mrs. Smith, I don't know if you remember this, but I was the one that told you it was time to refinance, right? I was managing this liability for you." And so the way you want to do this is you want to make sure that every single one of your past clients that you have in your database right now, if you know their rate and their term and their, I don't want, you could have 5,000 past clients, but let's talk about the ones that you're like actively engaged with. Every single one of those clients should have a strike rate and a strike payment that they know about and they know you're actively managing. If you have not done this already, call everybody in your database, even if you need to update whatever the rate is, even if you need to get updated information, and just say, "Hey, look, I want to be actively managing your liability for you. And rates are coming down. There's a lot of noise. There's going to be a ton of people out there. They're going to try and sell you on refinancing with a lot of points or convincing you to take cash out and giving up your low rate. I want to make sure nobody takes advantage of you. I want to make sure that you are confident that we are actively managing your largest liability. To do that, let me get some information. And I'm going to create a strike rate analysis. And I'm going to go over that with you." And then you present that to them and say, "Look, I think when rates get here and when costs get here, we should execute that strategy. And in order to do that, I just want to get your commitment today that I can update your credit report and that I can go ahead and lock the rate in that day." Because, and then just show them the MBS highway chart, right? Just say, "Look, here's an example of rates got really good for a couple hours and they came back down." All of my clients who already gave me permission to update their credit report and lock their loan, they took advantage of this little hour window. The other clients, they missed it because I can't call every client, right? I can't like reach out to everybody and have hour-long conversations. I would have missed that window for everybody else. So I want to make sure that we're managing this. I want to make sure that you know that it's set, and then make sure you also aren't listening to the salespeople out there, because there is a ton of salesmen in the mortgage industry that are just looking to sell you a refi that you don't actually need, or it's not advantageous until it gets to a certain point, right? Or they'll say some crazy rate, but they'll be including points and they won't show it very well. Team, all you're doing here is you're creating confidence. You have it. It's under control. They don't have to worry about it. They can tune out the noise. They don't have to worry about the billboards and the letters they're getting and the calls they're getting. They can just tune out all of that because you've told them that you're managing it. And then as rates continue to drop, keep following up. "Hey, we're close. We're not there yet. We're close. We're on our way, blah, blah, blah." And then when you're there, great, hit it, lock it, go. But if someone calls you and says, "Hey, I think it's time to refi," you might as well just, it's hard, right? You might get it. And then it depends on relationship. It depends on trust and opportunity, but you really want to be the one actively managing that for any past clients on a rate and term refi. So on a cash out HELOC, this is something where as you're doing your client success manager, whoever on your team is doing your annual reviews or your post-closing calls or your 3-month check-ins or your 6-month check-ins, you want to be always asking the question, "Hey, do we need any cash out? Are we looking at accessing any equity?" Obviously not going to be within the 6 months, but people that have been in their properties for years, if they call you and say, "Hey, I think I should take some cash out. I think I need a HELOC, blah, blah, blah," you're already defensive. But if we do our job appropriately, if we're doing our annual financial reviews, if our client success manager is there, if we have our predictive analysis in our CRM, it will tell us, "Hey, this client has a lot of debt now. This client they're about to have an empty nest. They might need to do home improvements." Like, your CRM should be pulling predictive data from your database. And we did our past webinar, we talked about this. So you can watch it in that. But that should be giving you information, and your conversations with your client should be giving you the information that you need. So you are telling them when it makes sense to take cash out or to do a HELOC. It should not be a reactive moment. New client refinance. This is something where you just want to make sure you start by asking the right questions. Like, "Hey, you obviously have a mortgage now. Why are you calling me as opposed to your current lender?" Like, that's a great question that really opens up a lot of information. I had a story about a client and that I use all the time, and you guys feel free to use this script, but I had a lady who called me. This was like 2015 or 2016. She says, "Hey, I want to refi out of my mortgage. And somebody told me you were great and I'm looking for the lowest rate." And I said, "Okay, did you get the lowest rate when you bought the home?" He said, yeah, I used B of A in 2011 when I bought the home. And I looked and she had an FHA loan. And I said, okay, glad you got the lowest rate back then. Did you know that there was, I don't know, probably 20 times in the last 5 years that you could have refinanced out of this FHA loan, saved all the mortgage insurance, right? Lowered your interest rate. Did you know that? She goes, yeah, I just never got around to it and I just didn't have the time, but I'm doing it now. And I say, man, that's the difference, right? Is that you believe that's your responsibility. We believe it's ours. Choosing the lowest rate last time actually cost you tens of thousands of dollars. What I don't want you to do is choose the lowest rate again this time, only to lose tens of thousands of dollars between now and 2021. Right. So we believe that we actively manage our clients' liabilities. And here's how we help blah, blah. And ultimately, she went with us. We did not have the lowest interest rate. Shocker. Right. But we have to tell people, like, what do you really want? But all she knew was to ask for the lowest rate. No one ever taught her any difference. Why? Because our industry sucks at that. Our industry is very rate focused. Right. So when we open up people's perception and get them to realize, oh, what I really need is a team that I can count on, now you have the ability to do it. Guys, I may run long here, just a heads up. If you can stick around, great. If not, you can always watch the replay back. But I'm going to need probably a few more minutes. So I'll keep going forever. You can stick around. And then clients moving to another property after kind of the rate lock, right? So they have a 3%. They didn't want a 7 or 8%. They didn't want a 6%. Maybe rates dip into 5.5. Maybe now they're ready. Again, client calls you, says, hey, I think I'm ready. I think it's time. We want to sell our house and finally want to buy a new one because there's not that big of a difference between a 3 and a 5.5. You're on your heels at that point. I always tell people they should just pick the cheapest lender and the cheapest realtor and just make it happen because they've already figured it out. So again, this is why you never want your clients to surprise you with their intent. So if you don't have a client success manager, if you don't have a way of doing annual financial reviews and helping people set goals and working towards them, you're going to constantly be on the defensive, right? People are going to be reaching out to you, asking you to do things, but they should definitely shop you because you didn't help them between the last transaction and this next one. There was nothing proactive about it. So again, every client you have, you should know, hey, are you planning on moving up? When, okay, great. Let's create some strike rates around that, right? When does it make sense? Like, where do rates need to be for it to make sense for you to sell your 3% home and move into a 6 or 5.5% home? But now it's on your radar. Now you're following up. Now you're sending them analyses. Your realtor's back involved, right? So everything that has to do with past clients is proactive. The moment you're reactive, your price is at risk, right? Your margin is at risk at that point. Retention really matters, right? And so this is why making this commitment to your client will really help. I showed this on the last webinar, but this is literally the retention rates for top mortgage banks, credit unions, and brokers. They're atrocious. That means most of our clients are leaving us every single time. And why? It's because of what I just told you. Nobody commits to anything to them. Nobody offers them real value. Nobody talks about before, during, and after. It's all just close loan. And if you don't have all this built, then they should use somebody else the next time. They should go find something better because a mortgage is the worst thing you can get. Nobody wants that. So let's stop offering that, right? Let's stop offering something or start offering something substantive, valuable, and that will really help that family's generational wealth. All right, so here's the giveaway. If you can scan that. If you subscribe to the YouTube channel, we really want to try and get as much information out into the world as possible. We really want to change the mortgage industry. We want to help as many mortgage professionals as we possibly can. You can just go click on that link, subscribe to the YouTube channel. You'll get all of our content as it comes out. You'll be able to share all the webinars you can watch there. So if you subscribe to that, we will see all the subscriptions. We'll reach out and we'll send you everything from today, right? You'll get all of the scripting built out. You'll get the list of disruptive questions. You'll get the list of questions to help your client shop for a mortgage. And I would encourage you practice those scripts, right? Role play with them. And if you're struggling with any of them, reach out. We'd be happy to help. Or maybe say, hey, look, maybe this would be a great next webinar we should do. Or maybe we could do like a 30-minute content session. But I want you guys to practice these things and start to implement them and then just give us feedback. Right. But you'll need those scripts and you'll need all the questions and everything, and then just give us feedback on them. So it will be helpful. But I would just encourage you, please don't go back to what you've always been doing. What got us to this point in time will not get us where we want to go. You have to stand out in such a major way that we can really help people and change the way this industry is seen. Otherwise, we're just going to keep racing to the bottom. If you want, you can take this assessment. I think this assessment will help you all drastically understand where your business is today. It is probably 10 to 15 minutes of an assessment. You're going to score pretty badly on it, just a spoiler alert, but don't stop, keep going. There's a little video in the beginning that will help you understand that. But understanding this assessment will give you a good basis or foundation for what you should be doing and what you should be aspiring for in your business. It will help me substantially. We created it because, again, we want to change the industry, not just for the consumer, we want to change it for the mortgage professional as well. And then our next webinar in March is going to be great. So I'm really excited about this next one. So essentially 30 days from now, third Thursday of March, we are going to go over team building and scale. Essentially how I went from 11 million in my first year to 3.2 billion, which is our run rate this year. It's a 15-year journey, but the way to go on that path, we're going to break down step by step. Every hurdle that I hit, a brick wall I ran into, every challenge I came up with, because I don't think there's a great blueprint that really helps people understand what's possible in this industry. And so a lot of times people aren't thinking big enough, they're not thinking appropriately enough. And with what's coming in the future of this industry, I can tell you that market share is up for grabs more than it ever has been. If you're doing 30 million a year right now, you could do 300 million a year in the next couple years. Right? If you're doing 100 million a year now, you could do a couple billion a year in the next 2-3 years. Right? All you need to do is just know the blueprint for how to get there. And so we're going to walk through every step of that. So I would encourage you all, please attend that webinar. It should be really eye-opening in terms of what's possible and how to get there. But I really just want to say thank you guys for your time today. For everybody who typed in the Q&A, looks like Jim, Rocco, Bryce, Jay, Carrie, Josh, Adam, Jim, we will reply to you guys individually and answer your questions. So I appreciate you guys putting questions in here. There's one anonymous attendee. Says, how do you coach realtors to help them refer to clients over when they pick up a new buyer that they say already has a lender? Love that. I'm going to do a video specifically on that for whoever this anonymous attendee is. We'll post that video on YouTube and on all social media channels. So if you're still on, that will be coming in the by early next week. So guys, if you need anything else, please reach out. Thank you so much for investing in your future. Thank you for investing in a better mortgage industry. Thank you for helping us change the expectations of the consumer so they stop just asking for a stupid mortgage, which nobody wants. And reach out if I can be helpful at all. But thank you guys for spending the time, and I'll look forward to hopefully seeing you all next month.